On this episode, we're talking different types of loan options with Scott Shafman from Cornerstone Mortgage. Hello everyone, welcome to the Bob Wahl Show. On the Bob Wahl Show we talk business, St. Louis, and real estate. Today I am covering a real estate related topic with Scott Shafman from Cornerstone Mortgage. Scott, thank you so much for joining me.
Thank you very much for having me, Bob. I've been following your videos for the last few months and very educational, and I love the traction that you're building.
Thank you, I appreciate that. I haven't been covering as much real estate related topics because, to be honest, I didn't think people would want to see that on Facebook. I didn't know if that was a platform to use for that type of content, but I've been contacted. I've had enough people contact me at this point saying, hey, I'm actually interested in learning more about real estate related topics.
Sure.
You should cover some more of that. So I was actually happy to hear that because I like talking about it. I just thought it'd bore everyone else. So,
sure.
Thanks for joining the show. Well, I guess I'll have you start off with, tell us a little bit about yourself and your business.
Sure. So I'm married with two kids, 7 and 10-year-old girls, Layla and Gabriella, and my wife is Amy. And we live in Ladue, and I've been in the mortgage business for about 15 years now. Been with Cornerstone for almost 7, and I love what I do. I love it.
What do you like most about being in the mortgage business?
I think that I was thinking about this, and I think the one thing that I love the most is going to closings. I love the closings. I love seeing people. Because if you're going to do a mortgage or real estate transaction, you're going to either buy a new home, you're going to be buying a new second home, an investment property, or you're refinancing to save money or shorten your term. So there's a fantastic result at the closing table. So I think that's what I enjoy the most.
That's awesome. Now, you work for a very respected, reputable company that was founded here in St. Louis. They've grown impressively. I know they're at least regionally in multiple states at this point. From a entrepreneurial standpoint, I've always respected your company. Great reputation. What do you like most about? And I know I've heard you talk constantly about how happy you are with that. How have you talk about what you like most about that company specifically?
Cornerstone, they're like my extended family, one of the greatest things that I always say is everything happens under our roof. So I'm working at the headquarters in Chesterfield, and when I say everything happens under our roof, processing, underwriting, our closing department, my manager's right down the hall, the owner is right down the hall. So I just feel like I feel very comfortable knowing that if I need an answer to a question, I can get it very, very quickly, and the support and all the operations that we have internally are phenomenal.
That's great. Now, as far as what I wanted to cover today, we're going to keep it somewhat simple, but it's a topic that I think a lot of, especially first-time home buyers, would be interested in knowing about. I'd like to talk about the different types of loan options available, types of loan programs there are, and the pros and cons of each different type of loan. We'll start off with FHA. This is a very common loan, especially for first-time home buyers. I know my clients always have a lot of questions about it. So FHA, who's it best for, and what are the pros of it, and what are the cons, maybe comparing it to something like a conventional loan?
Sure. So the pros of an FHA loan are that the minimum down payment's 3.5%, and it can come from it doesn't even have to be your own funds. It can actually come as a gift from a family member, which is fantastic.
Okay.
And to qualify for an FHA loan, the interest rate is not going to be credit score driven unless the credit score is under 630.
Okay.
So there's a huge benefit in that, unlike a conventional loan.
Okay. Well, and that'll get us into the conventional loan. Who is that type of loan best suited for, and pros, cons?
Sure. So the pros for a conventional loan is that, ideally, if you have 20% to put down, that's fantastic. And if you have a credit score of over 740. But if you put less than 20% down, you're going to have mortgage insurance. It's either going to be monthly mortgage insurance, which will be eliminated once you have 20% equity in the property. You can request to eliminate it, or it'll automatically be eliminated once you have 22% in the equity in the property. The other option is something called lender-paid mortgage insurance, where we as the lender actually buy out in the lump sum all of the mortgage insurance. So, but a conventional loan, they're great. You can put down as little as 5%.
Okay. Now there's ARMs. I think I'll let you talk about it. I know there's different types, different length of periods for the ARMs you can do. Those types of loans, what are the pros? What are the cons?
So, an ARM got a really bad reputation, I'd say about 10 years ago with the mortgage crisis.
Yeah.
But I don't think an ARM is that bad of a program, especially if somebody really only intends to be in the property 7 or 10 years. Really, the interest rate's going to be lower if they do a 7 or 10 year ARM versus a 30-year fix. So it makes sense in certain scenarios, but obviously if you're going to be in the house if you don't think you're going to move for more than 10 years, then it probably makes sense to do a 30-year or 15-year fixed.
Okay. These are good. This is getting a little bit more specific types of loans, and I don't really bump into this too often, but every now and then I get asked the question, and in a select few cases I have actually used the loan. But 203K rehab loans, I'll just have you talk about that in general.
Yeah, so a 203K rehab loan is an FHA loan. They're expensive. The interest rate's a little bit higher. They're not an easy transaction. There's a lot. You need to get a general contractor involved. But they're great loans if somebody does not have the money to put into the property, because all that construction work can be built into the loan amount.
So these loans are for people that are their property needs some work. They would love the opportunity to buy it and put work into it, have work done to it, and be able to have the ability to have the work. In a way, you're financing the cost of the work into the mortgage,
into the loan
itself.
Yes, absolutely. So it's a good loan for a select few people. Yes, absolutely.
It's a good option under specific circumstances.
Yes, absolutely.
This is even more rare, but a USDA rural housing loan. Just briefly touch on the type of loan and the benefit of it.
It just needs to be in a rural area. There's certain zip codes that somebody will qualify for USDA, and the biggest benefit is that you don't have to put any money down. 0% down.
Okay, so the idea of that loan is probably the government to help places in rural areas sustain home
to spur the home ownership in rural areas. Absolutely, 100%.
Okay, and last but certainly not least, the VA loan, pros, cons.
This honestly is my favorite loan, because I think this is the best loan. If somebody can qualify for a VA loan, they can buy a house with 100% financing and not have any money mortgage insurance, which is phenomenal. No monthly mortgage insurance if you qualify for a VA loan, and you can borrow up to 100% financing up to a $417,000 purchase price.
Well, that's great. No, I agree. It is an outstanding loan product, and definitely very well deserved for the veterans.
Absolutely,
no
100%.
doubt about it. So, well, that gives us a very good idea on the different types of loan options available and the pros and cons of each of them. And everyone, thank you very much for joining us. If you liked the episode, like, share, comment. Thank you very much for joining us. Goodbye for now. See you next week.
Thank you.